Hello and welcome students. In the last video lecture, I had explained you what are economic transactions, non-economic transactions, cash transactions, credit transactions, internal and external transactions. Now in this video lecture, I am going to explain you how to identify whether a particular transaction is cash transaction or credit transaction. To identify whether a particular transaction is cash transaction, the first point is there is an exchange through cash or bank. It means if the particular transaction is through cash, then the word cash should be mentioned and the transaction in which the cash has been exchanged either maybe in the form of cash or maybe in the form of check, then it is called cash transaction. Next one, in such transaction the word cash is mentioned. For example, it is given in the question in the transaction that goods worth rupees 5000 purchased on cash, then it is clearly identified that this transaction is a cash transaction. If the word cash is not mentioned and the name of person is not mentioned, then also it is treated as a cash transaction. Now if in the transaction the word cash is not mentioned and even the name of the person to whom the from whom the goods has been purchased is also not mentioned, then also it is treated as a cash transaction. Suppose it is given in the transaction that goods worth rupees 5000 purchased. Over here it is not specified that it is in cash or to from whom we have purchased the goods, that is also not specified. So that type of transaction is also called a cash transaction. Third point, in this transaction, bank or cash account is definitely affected and consequently bank or cash increases or decreases. But natural, if we are making the payment through check, if we have purchased the goods worth rupees 5000 and payment made through check, so our bank balance will be reduced by rupees 5000. In the same way, if we have purchased goods worth rupees 5000 on cash, then we'll make the payment by cash, so our cash balance will decrease by rupees 5000. So these are the three conditions through which we can identify whether a particular transaction is a cash transaction. Okay, next one, that is how to identify whether a particular transaction is a credit transaction. In this kind of transaction, no exchange through cash or bank. Naturally, if it is a credit transaction, the payment is not made immediately, so there is no exchange of cash or any kind of bank transaction will not take place, because at later date you have to make the payment in case of credit transaction. Next one, there is emergence of relation of debtor and creditor. Now, as the payment is not made immediately in case of purchase, and similarly in case of sales, you will not receive the payment immediately. So, the relation of debtor and creditor will be arised in case of credit transaction. Name of the person is mentioned. The word cash or bank is not mentioned. Now, make it clear. Suppose, for example, the transaction is given to you that goods purchased worth rupees 5000 from Amit. Okay, so over here the name of the person from whom the goods has been purchased has been mentioned, so it is a credit transaction. And the word cash or bank is not mentioned in the transaction, then it is considered as a credit transaction. If both cash word is also not mentioned and even the name of the party from whom the goods has been purchased is also not mentioned, then it is considered as a cash transaction. Over here, if the name of the person or the customer from whom we had purchased the goods is mentioned in the transaction, then it is considered as a credit transaction. It definitely affects the account of person, but natural, from whom we have purchased the goods or to whom we have sold the goods, naturally it will affect the account of that person. So in this way you can identify whether a particular transaction is a cash transaction or a credit transaction. Now, after understanding the how to identify whether a particular transaction is cash or credit, let us explain it or understand it more precisely with the help of illustration. Illustration number 2, that is given in your textbook. Describe whether the following transactions are cash or credit and explain the reasons. The first one transaction is goods sold in cash for rupees 500. Over here you have to identify whether a particular transaction is cash or credit transaction, and you have to mention the reason why it is cash or credit transaction. Directly I am moving on to the explanation or the solution of it, because it is in tabular form, so easily you will understand the solution of the question. The first transaction is goods sold for cash rupees 500. Here clearly the word cash is mentioned, so it is understood that this transaction is a cash transaction. And reason, goods are sold, so cash will come, that's why cash balance increases, that's why the reason is mentioned, that is cash increases. Next transaction, goods purchased for rupees 800. Now over here the word cash is not mentioned, and even the name of the person from whom we have purchased the goods is also not mentioned. So it is a cash transaction, and due to purchase of goods cash balance decreases, that's why in reason it is mentioned cash decreases. Third one, goods of rupees 900 sold to Meena. Now over here name of the person to whom the goods has been sold is mentioned, that's why it becomes a credit transaction. No cash word, see in reason it is mentioned, cash word has not been mentioned, and we have sold the goods to Meena on credit, that's why debtor relation will be arised. Okay, next one, fourth one, goods of rupees 2000 sold to Nutan for cash. Over here clearly the word cash has been mentioned, so it is a cash transaction, and goods are sold, so cash will come, that's why cash balance increases. Next one, that is fifth one, salary paid rupees 5000. We have paid the salary, so cash will go out. Here also the word cash has not been mentioned, and even the name of the person to whom the salary has been paid is also not mentioned, so it is a cash transaction, and due to payment cash balance decreases. Next one, insurance premium paid rupees 8000. Here also paid, that's why cash is decreased, it's a cash transaction, so cash balance decreases. Next one, seventh, goods of rupees 200 received as a free sample. It is a non-economic transaction. We have received the goods as free sample, we have not made the payment, nor we have received the payment. Okay, so it is a non-economic transaction because no any monetary transaction takes place between two parties. It is free samples that has been provided, so neither cash nor credit transaction. Okay, next one, eighth, furniture of rupees 5000 purchased from Shriji Furniture. Over here the name of the shop that has been specified from whom the furniture has been purchased, so it is a credit transaction, and no cash word has been mentioned, and purchased from Shriji Furniture, the name of the person or the name of the shop has been mentioned, that's why it's a credit transaction. Ninth one, rupees 3000 paid to Shah agency for advertisement. Rupees 3000 paid, that's why it's a cash transaction, and the name of the person or the party to whom it is being paid is also mentioned, but it has been clearly specified that that much amount has been paid, that's why it becomes a cash transaction. Paid, that's why cash balance decreases. Then afterwards, next transaction, 10th one, commission received rupees 3200. We have received commission, so cash balance would increase, so it's a cash transaction. Next one, 11th, goods of rupees 5000 purchased for cash, payment is made through check. Already we discussed that if we have purchased or sold any of goods through check, then also it will be considered as a cash transaction. So over here we have purchased the goods worth rupees 5000 and payment is made through check, so it is a cash transaction, and because cash balance decreases or bank balance decreases by that much amount, that's why. Next one, 12th transaction, goods of rupees 6000 sold, payment is received by check. Okay, goods of rupees 6000 sold and payment is received by check. We have sold the goods and the opposite party or the customer has made the payment through check, so over here also it's a cash transaction, the payment that we have received in the form of check, that's why it becomes a cash transaction, and cash balance would increase, bank balance would increase. Okay, Then afterwards, 13th transaction, rent received by check rupees 500. We have received the rent in the form of check. Okay, so again it becomes a cash transaction, and because of rent received in check, our bank balance will increase. Next, 14th transaction, that is telephone bill of rupees 700 paid by check. Now whatever the telephone bill, we have not paid in cash, we have paid in check. So again the payment has been made, so it's a cash transaction, whether it is in form of cash or in form of check, and due to payment the bank balance would decrease. Last transaction, a check of rupees 3000 issued to Lakshmi Ben for her dues. A check of rupees 3000 issued, we have given the check to another party or customer, that is Lakshmi Ben, because previously it was due, we had to pay that much amount to Lakshmi Ben. So now we are making the payment of the previous dues. So our cash balance would decrease, our bank balance would decrease, because we have made the payment through check. So it is a cash transaction and our bank balance would decrease by rupees 3000. Okay, so students, we have understood today the cash and credit transaction, how to identify, and we have done the practical illustration also related to that. Now after understanding the cash and credit transaction, to identify it, let us move on to the next topic, that is dual effect of transaction. Students, we had already discussed that out of the methods of accounting methods, we are generally utilizing the double entry system in the present scenario. So in the double entry system, we had already discussed that for any transaction there will be two effect, that is dual effect of any transaction. So let us understand what are the dual effect of any transaction. Under double entry system, as per its name itself, two entries are done for each transaction. It means for double entry system, name itself specifies that there will be two effect of any particular transaction. Normally business transaction is also between two parties. The transaction between these two parties may be of following matter. Normally business transaction is also between two parties. In the same way, transaction will also take place between two parties. The transaction between these two parties may be of following matter. First one, any person takes benefit of business or gives benefit to business. There are basically three types of accounts, that is real account, personal account and nominal account. Over here we are going to understand what are personal accounts, what are real accounts and what are nominal accounts. So any person, first one, any person takes benefit of business or gives benefit to business. When any of the person, whether it's artificial person or natural person, artificial person means any of the firm is giving the benefit or taking the benefit, then it is called artificial person. And when any of the individual is dealing with the firm, then it is called natural person. Okay, so when any person takes benefit or gives the benefit to the business, then it is called personal account. Then it is called personal account. Second one, increase or decrease in goods or assets, that is called real accounts. Because of any kind of transaction, if there is increase or decrease in goods or assets, suppose we have purchased the goods, then there would be increase in goods, but if we have sold the goods, then it would be decrease in goods. In the same way, if we have purchased the assets, then it would be increase in the assets. In the same way, if we have sold the assets, then it would be decrease in assets. So any of the transaction related to increase or decrease in goods or assets, then it is called real accounts. Third one, that is either expense is incurred or revenue is realized in the business, that it is nominal account. So any of the transaction related to expense or income of the business, then they are called the transaction of nominal account. So any of the person related transaction, then it is called personal account. Any of the transaction related to goods or assets, then it is called real account. And any of the transaction related to expense or income, then it is called nominal account. This will understand later on the rules of debit and credit of all the three types of accounts. At present, you have to understand which type of transactions are called real, personal and nominal account. Now, after understanding the dual effect of the transaction, let us take one illustration explaining the dual effect of the transactions. That is illustration number 3 of your textbook. The first transaction let us read the question first of all. Which two effects would take place for the following transactions? Explain. First one, that is Manoj commenced business with introduction of capital of rupees 20,000. Now we have started the business. So Manoj is the person who has started the business, and for starting the business naturally we need certain amount of funds. So that is called the capital that he is introducing in the business to commence, to start the business, that is rupees 20,000. So over here there will be two effects, first effect and second effect. You can see in the solution it has been mentioned dual effect of transaction in the books of Manoj. Okay, the format has been specified, that is serial number of transaction in short that has been described, what would be the first effect and what would be the second effect of each transaction. Already it has been specified that there will be two effect of each and every transaction. The first transaction, that was business commenced with capital of rupees 20,000. So due to business has been started, capital comes in, so cash balance will be increased by rupees 20,000. So you can see in the first effect is mentioned cash comes in, effect on cash account, cash balance increases. Okay, and the second effect, owner introduced capital, so effect on capital account. Okay, one thing, make it sure capital account is always having a credit balance and assets account will always having a debit balance. Okay, so because of the introducing of capital in the business, that much amount of cash comes in. So one effect that would be in cash account and the other effect that would be on the capital account. Next transaction, bank account opened with SBI rupees 40,000. Now bank account has been opened and we have deposited rupees 40,000 in SBI bank. Okay, so we have deposited that much amount of rupees 40,000 in bank, so bank is the receiver of that much amount. So one effect that would be in bank account and the other effect that would be that much amount of cash we are depositing the bank, so our cash balance that would decrease. Okay, so effect on cash account. So one effect that would be in bank account and the second effect that would be in cash account. Third transaction, that is goods worth rupees 3,000 purchased from Bhavna Ben. We have purchased goods from Bhavna Ben. So it is first effect that would be goods comes in, so purchase account effect would be there. Second one, we have purchased the goods from Bhavna Ben. Over here by mistake it is written Bharti Ben, whatever may be the name, Bhavna Ben or Bharti Ben. So Bhavna Ben, from goods we have purchased from Bhavna Ben. So Bhavna Ben is the giver of the goods. So the second effect would be in Bhavna Ben's account. First effect, goods comes in, so effect on purchase account. Second effect, Bhavna Ben is the giver of the goods. So second effect would be in Bhavna Ben's account. So each and every transaction will be having two effect. Over here the name of the party has been specified to you, or the name of the person from whom the goods has been purchased has been specified to you. So it is a credit transaction. Okay, so no any effect would be there in cash account. Okay, so over here you have to also identify accordingly the two effects would be given, that whether it's a cash transaction or credit transaction. Fourth transaction, goods worth rupees 5,000 sold to Vipul. We have sold the goods worth rupees 5,000 to Vipul. Again it's a credit transaction. Here the word or name of the customer has been given to you. Now the first effect, that is Vipul's account, because Vipul is the receiver of the goods. We have sold the goods to Vipul, so Vipul is the receiver of the goods. So one effect would be in Vipul's account. Second effect, that much amount of goods we have sold, so goods goes out of the firm, that's why effect on sales account. Okay, next one, fifth transaction, goods sold worth rupees 2,000 for cash. So it is a cash transaction. So due to selling of the goods, that much amount of cash will come in the firm. So one effect that would be in cash account. Second one, that is due to selling of the goods, goods goes out of the firm. So then second effect that would be on sales account. This is a cash transaction. Okay, last, that is sixth transaction, furniture purchased worth rupees 1,500. So furniture we have purchased worth rupees 1,500. So furniture comes in, assets comes in. So one effect that would be on furniture account, and due to purchase of furniture we have made the payment in cash, so cash goes out. So second effect would be on cash account. Okay, so in this way we have to understand what would be the two effect of each and every transaction. Now after understanding sixth transaction, let us move on with the seventh transaction. Seventh transaction is Commission paid rupees 200. Now commission we have paid, so naturally first effect that would be expense incurred. We have made the expense, so commission account will be effect would be there on commission account. Second effect, we have made the payment in cash, so that much amount of cash goes out, so effect on cash account. Then afterwards Vipul returned goods worth rupees 200. So Vipul returned goods worth rupees 200. It means whatever the goods that we have sold to Vipul, now he is returning that much amount of goods to us back. So it is called sales return. Previously we had sold, now that goods are being returned by them. So it is called sales return. So effect on sales return account. And the second one, Vipul is returning back. So Vipul is the giver of the goods. So second effect would be on Vipul's account. Next one, goods returned worth rupees 150 to Bharti Ben. Bharti Ben, goods returned worth rupees 150. From Bharti Ben we had purchased. Previously you will refer the transaction, then we have purchased the goods from Bharti Ben. Now from that goods with which we had purchased, we are returning back the goods worth rupees 150 to Bharti Ben. So now goods will be received by Bharti Ben because we have returned the goods to Bharti Ben. So Bharti Ben is the receiver of the goods. So effect would be there on Bharti Ben's account, and goods goes out because whatever goods we had purchased, now we are returning it back. So effect on purchase return account. Next one, check of rupees 2850 issued to Bharti Ben. Now, whatever the credit transaction that we had done with Bharti Ben, in return of her dues, we are making the payment of rupees 2850. So, Bharti Ben is the receiver of that amount. Okay. So, Bharti Ben's account will be affected. Second one, we are making the payment through check. So, our bank balance will be reduced. So, the second effect that would be on the bank account. Last transaction, Vipul gave check for rupees 4800. Vipul, to whom we had sold the goods, that person is making the payment to us. So he is making the payment through check. So our bank balance will increase. So first effect that would be on bank account, and the second effect, Vipul is the giver of that check. Okay, so second effect would be on Vipul's account. Okay, students. So today we have understood first of all how to identify whether a particular transaction is cash transaction or credit transaction, and what would be the dual effect of any particular transaction in case of double entry system. Okay. Now after understanding the two effect of each and every transaction, let us understand the types of accounts. What is an account? Information about it is obtained in chapter number 1 under accounting terms. In accounts, personal accounts, goods account, assets account, income account, expense account, etc. are included. Means any of the transaction or any of the account related to goods, assets, income or expense will be included in the category of accounts. Basically, the accounts are classified into two main parts or two main categories, that is personal accounts and impersonal accounts. Now in case of impersonal accounts, again there are two parts, that is real accounts and nominal accounts. In tabular form it is explained to you in your textbook also, you can verify it. That is types of accounts. There are two main parts, that is personal accounts and impersonal accounts. In case of impersonal, there are two main subparts of it, that is real account and nominal account. Already we discussed. Real account means any of the transaction related to goods or assets, and nominal accounts means any of the transaction related to expense or income of the business. So there are basically three main accounts that we have to study, that is personal account, real account and nominal account. Okay. Now, after understanding the types of accounts or the classification of accounts, let us understand in detail what are personal accounts, what are real accounts and what are nominal accounts. As you can see on your screen, in business when transactions are made on credit, the counterparty is person. If we have goods, if we have sold the goods or we have purchased the goods on credit, then the party, the counterparty or the opposite party, that would be a person or it may be a firm. Okay, this person may be natural person or legal artificial person. Due to credit transaction, debtor creditor relation, already we discussed that if it is a credit transaction, then debtor creditor relation would come into existence between the person and between the business and the other person. Okay. Live persons are included in natural person. It means suppose Hetal's account, Dharmendra's account, Raman's account, then all these are called natural persons, individuals to whom we have purchased or sold the goods. Okay, but business undertakes transactions with the legal artificial person also. Suppose we have deal with any of the firm, suppose Bank of Baroda's account, Jeevan Jyot High School's account, Parag Medical Stores account, LIC's account, these are called artificial legal person. So in that case also it becomes a personal account, whether it's natural person or it's artificial person. In brief, partnership firm, company, cooperatives, association, club, social organization, religious institutes are included in artificial person. So if we are dealing with any of such organizations, whether it may be religious organization, cooperative, business unit, partnership firm, or any of the association or any of the club, then all that are coming in the category of artificial person. So when we are dealing with any such natural person or artificial legal person, they are called the personal accounts. When natural or artificial person takes benefit of business, he becomes debtor of the business and business becomes creditor for that person. Okay, so your example is given to you. Ramesh sold goods worth rupees 50,000 to Shiv Limited on credit. Ramesh sold goods on credit to whom? That is Shiv Limited. So Shiv Limited becomes the debtor for Ramesh, while Ramesh becomes the creditor for Shiv Limited. So debtor creditor relation arises between the two parties. Next one, that is real account. In real account there were two parts already we discussed, that is goods related transaction and assets related transaction. Okay, so first of all let us understand goods accounts. Products which are dealt with by the businessmen are treated as goods. Different kinds of goods related transactions are made. Keeping in mind the type of transaction, it is recorded in the goods related appropriate account. Following goods related transactions are used. For example, purchase account, sales account, purchase return account, sales return account, goods withdrawn for personal use account. It means any of the goods that we are withdrawing from the firm for our personal use, then it is called goods withdrawn for personal use. Goods destroyed by fire, if due to any of the unforeseen situation, if the fire has occurred in the go down of the business and the goods has been destroyed by fire, then all that type of transactions are called goods account. Goods given for advertisement purpose, as free samples we have given the goods, then they are called goods given for advertisement account. Then afterwards any kind of donation we have given, and not in the form of cash but in the form of goods, then it is called goods given as donation account. Okay, so all these type of transactions come in the category of goods account. Next one, that is asset account. When business holds ownership for any tangible or intangible thing and has monetary value of it, is known as asset. Already this we have discussed what is the meaning of tangible assets or intangible assets. And that is which we can see and touch, that are called tangible assets, and which we cannot see and touch, that they are called intangible assets. Tangible assets like land and building, plant and machinery, furniture, vehicle, and intangible assets like goodwill, copyright, patent, trademark, etc. Okay, so in addition to tangible and intangible assets, investment like investment in shares of company, in debentures and deposit accounts. Suppose we have made investment in shares of any particular company, or we have purchased the debentures or made the investment in the debentures of any of the company, then all will be any kind of investment, any kind of tangible assets or intangible assets that we have purchased or sold, then they are related to transactions of assets. Okay, then afterwards current assets are also included, where accounts like cash balance. Current assets means which can be easily converted into cash within a very short time period of 1 year. Okay, in that the examples are cash balance, bank balance, debtors, stock, expense paid in advance. All these are examples of current assets. So any kind of assets related transaction, whether it may be tangible assets, intangible assets, investment, or current assets, will be included in assets account. Last account, that is nominal account. These accounts of business perform their operation throughout the year, because during the entire financial year, we have to make many of the expenses or incomes may be received in order to run the business. These accounts are called as income expenditure account, because we had already discussed in nominal account any kind of income or expense related transactions will be coming in the category of nominal accounts. Okay, so the computation of profit and loss of business is ascertained on the basis of these account. On the basis of whatever expense or income during the entire financial year, on that basis only the company's profit or loss is being determined. So this account is very important in order to determine the profit or loss of the company at the end of the financial year. Okay, so that's all for today, students. Today we have understood, again recalling the topics that we had studied, that is we had understood how to distinguish whether a particular transaction is cash or credit transaction. Then afterwards we had taken a practical illustration for it. Then afterwards we had understood the dual effect of any transaction. In that we had understood the three types of accounts, that is real account, personal account, and nominal account. So that's all for today, students. See you in the next video lecture. Till then, goodbye, keep practicing, stay blessed.